Hey, hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis where we analyze what and try to understand what happened in the market using the technical charts and then plan for a better trade for the upcoming trade day. That's February 13, Tuesday 2024. So we had a sharp sell-off today, especially in the bank index. It was sliding down. And we have the VIX that's rising and it's reached 16 now. What do we expect now for tomorrow? Which is a wrap up of this analysis that some of it are not updated like a file, but you can take a screenshot if you like. But we would look at the charts first in detail and try to understand. Let's look at what is the candlestick. Look at today's candlestick. It's a bearish, white range bearish, and it's engulfing the previous candle. So that's heavily bearish. That's a Nifty. We are talking about the daily charts, and you can see that it has lost the 20 exponential moving average, which it had gained during the previous recovery. It's lost that. And Banknifty, you can see it's a even more wider range, white range bearish, and it's also almost fully engulfing the previous green candle, so it's heavily bearish in that sense. And it is unable to take out the 20 and the 50 exponential moving average, and in fact has breached the 100 exponential moving average as well, and 200 exponential moving average only is that is left, and that's where it is done a small bounce. Remember that it's very close to the previous swing low where it had breached the 200 exponential moving average. Even today it was breached and then bounced from there. So that zone of 44,400 seems to be some kind of support, and that resist is exactly what happened. But the fact remains is that from the all-time high, the 8.5 correction, all the gains to recover that is completely lost, and the Banknifty, which in fact had completely recovered the 4.5% short correction, and all the gains are lost now. If you look at the trendline channels, you can see that it is still in the consolidation zone. So the retest is not complete for the Banknifty. The retest would mean it is going to the previous swing low of 21,150 nearby. There's some more left towards that, but otherwise it seems like even before going to the top of the trendline channel, this time after the recovery, it had seems to have started the retracement on the downside with a big sell-off that confirms it today. Natively, Banknifty was more weaker than Nifty, and it was struggling at the 20 exponential moving average, and today even though we had a piercing kind of pattern yesterday, it failed miserably and it lost another 100 exponential moving average also today. But you can clearly make out that the blue trendline channel, which it had conquered, is lost the day before yesterday. It's the following day of the RBI result outcome, and it's confirmed that it is lost once more by today's candle, and seems like it is heading to the yellow trendline channel bottom that could go as low as 43,200. So that's what it is. So if you look at the sub-resistance levels, the first immediate resistance on the Nifty on the upside would be this box, right? Would be this smaller box that is inside the big one. That's 850, 21,850 will be the first hurdle. After that it will be 22,000, big rounding number, and then 22,126, the all-time high levels resistances. Downside, the first support now would come in at the it's right now closed at 21,600, so 21,500 is a logical place where some supports could come in because of the rounding number nature of that, and then after that 21,350 would be the natural retracement of 23.6 retracement levels that could find some its confluence with the 50 exponential moving average support as well. So 21,300 would be 350 would be a major zone of support, and the main support could come in at 21,150, which is the previous swing low. And after that it is 2950 and 21,000 rounding number supports in the Nifty. While the Banknifty The major support now once again could be 200 exponential moving average, so on 44,669, and very close to that we have the 44,600, which is the Fibonacci retracement of 61.8. So anything beyond this 61.8 could turn to be either heavily bearish or bullish, depending on versatility. So this 44,400 is very crucial, and breach of that means that we may have trouble. But the next support down there will be at 44,000 rounding number, and then 43,960, which is got a gap support. Bridges that could go to the bottom of that yellow channel that you have. The consideration swing low could be as low as 43,300, 200. That sounds right. So that's how it is. Support resistance level. Let's just quickly get back and see the wrap up. So we basically lost 166 points, relatively less loss as compared. It's only 0.76% is loss, while it's 1.65% is loss of 755 points on the Banknifty. Both are found bearish engulfing, which is indicates the intensity of the bearishness that is there. So all the gains that happened while the recovering the 4.5 value retracement is now half of that is gone, because it's 2.5 from the all-time high now. Retracement once again starts in the Nifty we are talking about. But remember, we are also lost the 28 exponential moving average support as well. So it's always in the mid of a 31% rally, right? And where we had a minor, only relatively less correction that happened, less than 5%. And Nifty dip cut at 8.5, and just trying to recover that, and halfway at 20 exponential moving average it fell into this bare hands, and then it is back to the 8.5 correction itself, and it had done only a 26% rally as compared to the Nifty of 31. So intraday it was trending down with volatility at 16 plus, so it was trending down from beginning to the end. You can say in both indices. Fyers was small buyers yesterday, and DS were small sellers yesterday, last Friday. But mostly the Fyers were sellers in the last several weeks, up to 50,000 crores in cash market sell-off. And otherwise in the FNO they were one day bullish, next day bearish, so they were switching. But in the cash market they have been bearish, they have been selling mainly. Although Friday, the last data that we have, there is a small namesake buying. There is today definitely more. It must have been big sell-off by the institutions, but the data is not coming. It must be Fyers itself the culprit, I would assume. Resistance levels of support resistance levels of Nifty Bank. I have already discussed. I'm not repeating that. You can make a note of that. So the moment it is sideways falling in the Nifty, and Banknifty it is in the bear zone, so it slipped back to the bear zone. Remember, it had recovered after slipping a few days back, and then once again it has fallen to that. And the trend also has crossed over the bear zones on both indices, with a weaker bearishness in Nifty and a increasing bearishness in the Banknifty. So the VIX is again spiked 5, and it is close to the 16. You have to be cautious. It's no longer the low voltage. It's very close to 20. You're extremely cautious when it comes to the position sizing. Manage your risk when the VIX is spiking up above 20. Definitely, or stay out of the game, especially if there are derivatives and options trading and things like that. Well, demands are contracting now. The Nifty confirmed, indicating sideways movement ahead on the daily charts, and the Banknifty it shows that the expansion has begun once again on the downside, which indicates potential volatility on moves ahead. Technically, the charts have lost the momentum and the trend in the short term has lost the 20 exponential moving average also. And Banknifty in the case it has lost all the demo supports, and it's also making a lower low, lower high pattern. Nifty that has not happened yet until the next swing low is breached at 21,150. So all the gains that Nifty had made by a full recovery of 4.5% is now history, as I said earlier, and Nifty is back to the 8.4 correction which it had done in while just all this is after a big breakout December month, vertical breakout without any corrections. I would assume that this is a correction that may be happening before the big move that will play out ahead of the elections, right? Mostly, never know. But anyway, Nifty has stiff resistance near the 22,000. 3-4 times it had attempted and failed to cross and stay above that 21,100 levels, and finally it broke down. Then we'll have to see whether it will make another attempt to move up, or would it break down the previous swing low and make a lower low like Banknifty or not. We'll watch out that. But double top end patterns is what is playing out right now, probably. Across the sectoral indices, if you see, there's a red day-to-day exit for the IT and the pharma, which is showing some green flattish. All the sectors made in short-term bullishness, except for the medical and the reality. They have slipped in the sideways, right? And if they have one guy who has gone into the bearish zones, so that's the FMP sector for the first time yesterday, followed the bearish zones. So major lows happen in reality in the metal sectors primarily. So the sector is no longer bullish. We have very few just bullish there, right? Bullish is probably Reliance and Infosys. Others are also falling sideways, basically, right? So heavyweight stocks, the contribute maximum to the index is also gone red today, except for the Infosys, which shows some green. Reliance and the TCs of the two stocks are made in the bullish round. I mean, the heavyweights that contribute maximum to the index. So that's all on the sideways mountain. And the sad part is that HDFC and the ITZ and the Kodak Prime, which are major contributors to the index, have the short-term bearish momentum also now. If you look at today's data, it was ICICI Bank, HDFC Bank, Kodak Bank, all the three major banking stocks, and the ITC that so bigger, around 2% of cut today. This index was mostly green. Some consolidation is seen with Dow Jones. And so remember, it is at all-time highs. It has been rallying just like ours, and then it's at the very top. That's supposed to Q that we have. Dollar is seeing some spike today, but rupee gains a little bit, but it still remains to be weak at the 83 plus levels. Crude oil is red. It's at 76. It's trying to move up, but it's a red day today. Gold also showing some red at the top. So it's trying to consolidate at the top, while crude oil is trying to consolidate at the bottom. So that's something that has, so no major cues from the global side. Yep, so whenever there is a dip that is happening, then that's an opportunity for buy for long-term investment in SIP mode of quality stocks alone. As a trader, what matters is the direction. Direction is not yet confirmed with the to the bear zones or the bull zones. Of course, it is no longer build the bull zones. It's rather confirmed that it's in the bear zones. Basically, it's a sideways still. Although Banknifty is slightly fallen to bearish, but every time it falls, it quickly climbs back as well. So we'll have to wait and watch if a confirmation is there from the Banknifty side, whether it's bearishness with intensity in the short term is going to happen or not. If that is the case, then we have to go direction. But then we can still play the direction. But since the difference between the implied volatility and the realized volatility is not in favor of the option sellers. It's better to stay away, and especially if the VIX is spiking up above the 20, you'll have to cut short your positions, as I said earlier. So switch your strategies and play, and watch the markets and play accordingly on the weekly or the monthly, whatever you play. Okay, stay safe and watch out your position size, manage your risk, appetite, stop losses. Do not play overnight without hedges, because you could have black swans that can come in, given all the uncertainties that can turn against you at any time. Have hedge positions, especially on the put side. That's all I have. If you are watching this and not subscribed, please subscribe and share to friends and colleagues, and so that it reaches out to max. And that's all I have. Happy trading, happy learning, happy investing. Bye bye.